Welcome to the AI Revolution podcast or something. What's the name of the
The
podcast? No?
yeah, the financial AI revolution. Hey, Ethan, it looks like
Yeah.
you have my same name in our
Oh
system.
no.
I will, I
Again.
will I will change it. No worries.
How do I
How
change
are
it?
you, my friend? How was this week? Business week?
Good, man. Everything is good. Things are well. How about you? What about on your side?
Wait, I made a mistake here. Yeah, that's good.
Thank you.
No, that was a honest mistake, my friend. I'm sorry.
It's okay, man.
It was very nice. Everything was really easy and work. Something interesting is that something that I find really interesting about investment is that you can work, you can have your normal life, and yet having like full activity. Like it's super interesting the fact that you can. Of course, you're not being a let's say a day trader, someone who is dedicated to that, but you can still have some activity in in the financial world, dedicate your life completely to other stuff, like working in a technology company like we do, right?
Yeah, definitely. So, Ugo, let me ask you a question. What is today's podcast about?
That's a great question. And today we're speaking specifically about tools and platform powered by AI that can be super helpful for investing and business activities. What do you think about that topic?
Well, look, why don't we take a step back maybe and say that we're actually starting a series now, basically, kind of,
Yes.
sort of. Obviously, we'd love to hear feedback if any of our listeners have a preference, but we are going to we want to help educate. I mean, obviously, what is the goal of our podcast ultimately is to educate people on AI and finance and how they work together. But before we can
Correct.
get there, sometimes you need some like a little bit of the building blocks, the basics. So we need to understand a couple of things about finance, like what's investing, how do you invest, what are some of the pitfalls, what are some of the gotchas, how do you go about investing, and then we should layer on or could layer on, how does artificial intelligence come into that, because AI is awesome, but like you have to be able to apply it correctly, and so that's I think that to me is what we're doing here, because we want to help people understand, better themselves financially, better their wealth, and that comes through a big area is through investing. And so we thought, Ugo and I thought that it would be pretty interesting to see, first start off walking through some of the basics of investing, and then applying AI, whether it's ChatGPT or other types of AI tools for investments and investing, um, to see how somebody that has never invested before could potentially invest. Now, disclaimer: we have to say this because we don't want anyone to come at us or anything like that. So this is not financial advice. Okay,
That's
guys,
super.
we are not providing
You're
any financial advice. Anything you do is nothing to do with us. We're simply giving our opinions, and that's it. Like, we're not giving financial advice to anybody. But that being said, does that
Yes.
kind of sound like what we talked about, Ugo?
I think that that's super clear as well, because many people, I mean, this is not the place to look for the specific investment that you are going to make, because everyone has a very should have a different strategy for for investment. So this is not a place to
That's a good
receive
point.
any advice. This is just a place to find ideas, ideas like which tools can empower you to make the best of your financial life. That's basically our purpose. And and yeah, you were mentioning that this is about kind of a journey, right? Like the fact that everyone has a journey in their lives, in their financial lives. And when
That's
it
right.
comes to investments, uh, I'm sure that there must be some steps that you must follow in order to be a financially savvy investor, not just someone with a couple of dollars, going to the internet and finding some stocks. You need to have, like, go in a ladder of knowing some things, the basic things, then the tools that you need to apply, then other aspects. So the
Right.
idea of this podcast is that we dedicate one of each of our episodes to one of those steps. And today we want to speak specifically about the the AI tools, right? That's
Well,
basically the first.
so I don't want to cut you off, Hugo, but perhaps so we talked about the other day that we would first ease into it, right? First go through, like, like, because
Basic
you
stuff,
mentioned what?
like the basic stuff. Maybe
Right.
it's yeah, knowing the basic stuff is a first step in everything, right? Like,
Right, and I think you also made touched on a very interesting point, which is important, and I would argue is probably the very first question you should ask yourself when you're looking to looking at investments for growing your own wealth, for wealth creation, and that is, what is the purpose? Like, why are you saving? What are you creating your wealth for? Like, I know you have your reasons and I have my reasons. Everybody has reasons for, for wanting to generate wealth, other than just the obvious of, I want to be rich. Everybody wants to be rich, but, like, you can't just wake up one day and say you're going to be rich, right? You have to, because there's a lot of factors. So, one of the reasons why it's important, I think, to understand first yourself why you're investing, is because you have to be able to determine your risk tolerance. Do you want to talk a little bit about what risk tolerance is, Hugo?
yes, for sure. Basically, uh, in this financial market, there's any kind of investment. And normally, when you receive the offer of a really good investment, it comes with a price. It is not for free. When someone says to you that there's an investment that will render 100% a year or something like that, that
Run.
can, I mean, that can happen, of
Run
course.
for the trees. Not even Bobby Axelrod can do that.
Yeah, but I mean, uh, it's important to say that there are investment that it can give you that. I mean, that can be a reality. But what you have to do is be really uh, like aware of a clear stress that is between two things. If you want to receive a high return, you have to expect a lot of risk. If you want to have low risk, you have to pay with less return. That's basically the things. And in finance, when we speak about
So
risk,
wait, Hugo, so why not just go for the high risk all the time if that's the highest reward?
I mean, you can, but that's not a good thing,
Why?
because
I mean, pretend like I'm somebody who has no idea about investing. What's wrong with that? I want to make the most money, so why don't I go with that strategy?
I would like to answer you with a story of a friend that I have.
Sure, love to
It
hear it.
was basically someone who was in his 30s. Probably he just had. I mean, he was working for maybe like 10 years. He was having very good works and receiving a good salary, and he had some savings and started investing in the stock market. And he did well in that area, but someone offered him, I don't remember. It was like, cryptocurrencies or other stuff that he didn't know very well how it did work. Second, that had a lot of risk. I mean, I will say what is risk in this world. And third, honestly, he had a high expectation on that. He expected to have, to instead of, going slow on building his capital, he just wanted to receive a high return in 1 year. Like the kind of return that a person takes years, 10 years to make. He wanted to have it in 1 year. He received this advice of someone who said, hey, this is a good investment. And he went on, and honestly, what happened was that he lost most of his money. And that's, wow, what happened here? Sorry. Basically, that's a story that everyone has have heard sometime in their lives. I'm sure that if you're listening as you have someone or yourself that went through that experience, and that's not nice at all. I mean, I can tell for my own experience. So I think it's okay if you wanna, if you have some dollars you can spend and you want to invest with a higher risk, but you have to be aware of the of the implications of having high risk. You say you have risk tolerance and high risk tolerance until you see your money go away. That's basically what I remember in this book that I was reading that I mentioned the other day. And I will probably let the name in the comments. This guy, the name of the book is something like uh, "What I Learned When I Lost when I lose $1 million," something like that in the stock market. It's the guy that had this experience. He went, he earned like $2 million, and then he kept this attitude for a lot of time, and the market,
Like a casino, huh?
yeah, he's kind of a casino man. But the story is that he had a phrase that was like, what is too much or what is too little of money when you are invested in a stock, for example, and the stock is growing, is higher, is increasing its price. In that moment, you say, "I invested too little." When you see that an action that a stock in a day is growing 10% or 20%, that happens sometimes in the market. You say, I should invest not what I had, but a double or triple that. And that's kind of a nice feeling. It is disappointing, but it's better than the opposite feeling when you say, what is too much. When you're seeing the same stock falling 20%, you say, I invested too much in this stock. And that's
Well,
something that human,
not
like,
necessarily. I mean, I think it kind of depends, no? Because, like, I mean, so you're familiar with the concept of dollar cost averaging, right? So the the idea of, let's say you invest in stock XYZ, which is worth $10 today, and then tomorrow it plummets to $5 a share. So like you're saying, if you bought 100 shares, you'd be sweating, right? Maybe. But instead, if you double down and bought another 100 shares, all of a sudden your price per share goes down to $7.50 instead of 10. And then if you and the reason I'm kind of like being a little bit hesitant on this is because before doing something like that, you want to make sure you believe in this company and it has solid financials and all the things that you need to know about when you're investing. But if it's still a solid case, then for whatever reason it's a bad press or a bad quarter or whatever, and it dunks, you want to buy more when it goes down. And the reverse, when it goes up, you want to sell because, what if it goes down? So you need to hedge your risk and your reward as well at the same time.
yeah. But if you take a look at the stories of people that really had lost a lot of money, I mean, that works. I agree with you. It's logical that if I average the price in which I bought a stock with a lower price, that's just great. But when you see, let's see the negative face here. Not only the positive side. When you see the stories of the people that has lost all their money, it's something like that what happens normally. Is someone behind saying like, hey, this talk is, I don't know, like 2 weeks ago I was listening to a Colombian guy that had a lot of investments in Silicon Valley Bank that went off.
Oh my gosh, poor guy.
And you know what was the first, the initial, he was a client of Silicon Valley. He mentioned that in LinkedIn. So
Hang
he
on,
said like,
maybe for our viewers or our listeners, we should probably explain to them what that whole episode is about, just briefly, maybe.
yeah, 2 weeks were in April 2023, and 2 or 3 weeks ago, probably a little bit more. One of the key elements of the entrepreneurial ecosystem of Silicon Valley is Silicon Valley Bank, was Silicon Valley Bank, and had an important event of lack of liquidity. They didn't have money to respond to some of their, I mean, to their obligations, and they were forced to shut their business down. So what I want, the story that I want to mention was that one, this guy is one key element in the entrepreneurial ecosystem in Colombia, in Latin America. He lives in the US, in Silicon Valley, and he was narrating what he was living while it happened. During that day in which someone called him by the telephone and say, "Hey, it seems that your savings in Silicon Bank are not safe. So get them out of the bank." And he achieved to take out some of the money from Silicon Valley, and then, but he didn't believe that it was the end of the bank. He just believed that it was like a crisis, like like someone speaking, but that wouldn't be serious. And in the moment, the stock had fell, let's say 60%, and he decided to buy some stocks of the bank. And he mentioned that, he said, like, it was in the middle of the crisis. I have been having a relationship with this bank for many years. I know the owner. I know the story behind this company. So honestly, what I believe is that it would be temporal, or so he bought some stocks 60% down, because he believed that it would be a a great average in the portfolio that he and no, basically what happened the next day is that the Federal Reserve, or the authorities, I'm not sure, I think there is not the Federal Reserve, probably is the SEC, but I mean the United States authorities decided to close the bank, and to compensate everyone that had money in the bank. So, but the story is what is behind a moment of decision like that. Like, honestly, what happened is that you lost your objectivity. You think that there's a big opportunity, and you say, let's go do it, and then uh, most of the times I mean, it is not a big or relevant situation, but sometimes it is. And when it is, you lost everything. That's what I mentioned. This is really a really key topic when we're speaking about finance. How do we keep our expectations and our strategy afloat in any moment? I mean, the first step, as we were mentioning, was having clear what is this for. I mean, what is the objective of these savings or these investments for you? For example, for me, the key aspect today for any investment that I have is, being able to pay for the education of my kids. That's my main goal. That has an expected date when it will happen, unexpected value. So, you can have a strategy for that. And I'm sure that everyone has some objective like this. So if you have a clear objective like that, you have to perform and do your investment activities associated, aligned to this objective, right?
Yeah. So then, I mean, if your goal is for your kids, and I know your kids are, they're not in college yet, and they got quite a little bit to go. So you're probably doing more aggressive, more risky type of investments for that purpose, right? Because you have a longer term.
It is a longer term. I am more. I learned something. I think that I learned it the hard way, I think. And it is that when you are young and when you don't have a lot of things to lose, I mean, like, the general belief is that what you have to do in terms of finance is that you have to keep, or you have to be really aggressive. And I was taking a look at someone's article a couple of months ago, when he showed, what is the final value of a portfolio of someone who is super aggressive at the beginning of the investment and conservative at the end, like close to the date, and the opposite view, someone who is really conservative at the beginning and aggressive at the end. So when you are conservative at the beginning, you create a bigger I mean, like, for example, if you're in your 20s and you start investing in really conservative bonds, with low interest rate but low risk, probably what will happen is that you will force yourself into a savings, uh, let's say, costume of being saving all the time. And the magic of the interest rates, like the composed interest, will make that at the end of the day you will have a lot of capital to invest. So you can, let's say, you can put the eggs in different baskets, and then it would be more effective. You can diversify when you have enough capital to do it. And the opposite happens when you start. I mean, when you take a lot of risk at the beginning, of course, that you can, you can increase your portfolio, but you're always taking lots of risk, and you will see that at the end of the day, not necessarily the like the final result is as good as the or as at least as expected, or as forecasted at the beginning, as the case of the other person.
Right. So just to kind of recap what we've been talking about now. So this
Yeah.
whole point was really about identifying investment goals and what your risk tolerance is, because that's the first question I think you should ask yourself, in my opinion, is it before you get into investing is why are you investing? What are you saving or investing for? And what is your risk tolerance? So like we were saying, if you have a high risk tolerance and you're prepared to lose a lot of money to make a lot of money, that's generally what people do when when you're in your 20s or 30s, you're starting to save for retirement. You have a good 30, 40 years maybe until you need to use it. So it's okay if you have some losses before you need the money, as long as you can wait it out, because generally speaking, as long as you're not, and I can tell you a story, actually a personal story, where I'm just gonna give me some white hairs just even thinking about it. But I lost my pants in the market. But yeah, so if you have the time to recoup it, then you can allow for highly aggressive startups, or even interesting investments. Like if you're on at the point where you have enough money that you can be investing in pre-IPO stuff, then that's also another area that's high risk, high reward. But if you're towards if you're in the middle of your life, towards soon to be retiring, or if you need money now, you want to be more conservative, maybe just invest in blue chip stocks, or bonds,
But
like you were saying.
what are the blue chip stocks?
Right, that's a great question. Thank you, Hugo. What are blue chip stocks? That's an excellent question. So, blue chip stocks are generally stocks that people consider to be stocks that are generally safe, they're stable, they're large companies, they're generally in a stage where they're not in hyper growth, they're in the stage of paying dividends, and they're generally, pretty stable. So examples, I would probably argue all of Fang, Facebook, Apple, Amazon, Netflix, and Google. Those kinds of companies are blue chip. Maybe Netflix is arguable these days. Who knows? But
Yeah.
like Johnson and Johnson, the big name companies that are public, those are generally considered blue chip and considered, nothing in the market is safe, but it's considered safer than others. So let
Yeah.
me tell you a little story, if you want,
Of
about
course.
an investment that I made. And this was a big learning lesson for me personally. So I know that my wife is listening to this, and she'll probably get a laugh. But she loved to call them, to I hope she's not upset with me saying this, but she loves calling the stock Mermaid Killers.
Right?
I'll explain. So there's a company called North Atlantic Drilling, and I can't remember right now the company that is its parent, which is one of the biggest in the world. But this particular division of it was they specialized in like deep sea Arctic like type of oil drills. So like they take ships out into the middle of nowhere, and they would kind of get the oil from those areas. Um, and the all the financials were amazing. Like it was growing. And this was before this was when I was living in New York, so this was a long time ago. Like So the but this so here's the problem. Okay, so it was doing well. I think it was like when I started investing, it was like $5 or $6 a share, and at its peak, it went all the way up to like $11 a share. And so, and this was like less than a year. Like this was a really short term, like amazing thing. In hindsight, obviously, I wish I would have cashed out then, but I thought that it would keep going, honestly. And the reason I thought that, and the whole world actually thought that, because they had closed a massive deal for billions, I think it was. Can't remember the exact number though, with Russian backed oil companies in order to sell it to them because they had contracts, right?
Uh-huh.
Well, that's when U.S. sanctions started to hit Russia tough. This was before Ukraine. This was, I think, even during the time maybe of Obama, possibly. Like this is when like the U.S. started putting heavy restrictions on all the oligarchs, on all of those people. This was like maybe
Wow.
5, 6, 7 years ago, maybe, and they announced the deal. Stock went up to $11, and it kept going. But then, like a couple days later, literally, it was announced that the company they had to deal with had put sanctions on, and so the deal was effectively killed, and the stock went ultimately all the way down to $1.
Wow, $1 after being, I mean, after being a great investment for 1 year completely.
Yeah, that gave me so much anxiety, dude. That was when
Oh,
I kind of just basically
no,
exited
no.
market trading, and I've kind of basically just done EFTs ever since. Since that's EFTs, we can get into another time. That's another kind of investment strategy. But yeah, so on the bright side, the glass half full was that we had a couple of good years that we could claim lots of losses on our taxes.
That's a good part. That's good.
Yeah.
You were mentioning about the blue chips, right? And I have here,
Yeah.
maybe I can probably I can share this screen quick. This is not it. This is
So anyway, for the context, the reason why my wife refers to it as the Mermaid Killers was because they would drill in the oil in the sea, and she loves mermaids, the idea of it, and she's like, oh, they probably killed all the mermaids.
oh my God, I don't like it. I'm so sad about it, man.
Yeah,
Okay.
yeah. Well, I learned a valuable lesson, man.
No. Yeah, absolutely, man. There are a couple of things or thoughts that I have regarding that, and I will let you know in the moment. But you were mentioning the blue chips, right?
Right, right.
This is this is a really ugly, really complicated to see. Guys that are hearing, I'm sharing my screen at the moment.
Yeah,
Uh,
anybody that's because remember we got two audiences: people watching and people listening on
yeah,
podcast.
for the ones that are listening, this is something that
Stock
uh,
rover.
yeah, Stock Rover is a company that we don't are not related at all. But it was interesting to see that one of the first answers that we received from ChatGPT related to how AI is incorporated in finance mentioned a Stock Rover. So we went there. I went there, and um, I really found this interesting and useful. So what I'm sharing now, we were speaking about what is a blue chip stock, right?
Hmm.
So one of the services that this AI powered company Stock Rover offers is offering everyone, or I mean, like, the people who pays for this. I am actually in a premium trial.
It says
Um,
premium plus.
yeah, but it's a trial. It's for free. It will
How
probably.
long has this trial been? A year?
No, man, in 2 days I won't have this. But
Oh, okay.
let's take advantage of the possibility
Yeah.
of showing this. And they have this functionality that is called screeners. A screener is a really useful tool because basically there's a lot of stocks in the market. I mean, more than $10,000. 10,000 stocks are public. I don't the number that's a number that I used to hear before. I'm not sure about that number, but it's more than $4,000 the stocks for sure. You will correct me with our friend ChatGPT in a moment, probably. But
You know me so well. I'm already putting it in right now.
of course, No, but the thing is that are more than, I mean, more than the stocks that you can imagine and
Approximately
you can know of.
5,000
You know?
according to Investopedia.
Imagine that. That's like 5,000 stocks. So you need a way to bring those stocks or have a look on the stocks that are interesting for you. And a screener basically does that. I mean, like creates a list of stocks. I imported a screen called Blue Chip Finder to see which stocks are the examples of blue chips.
Just to be clear, did
This,
you create this or this is just a feature?
this is a feature. No,
Ah,
what I did basically was going to screeners here, you
yeah.
know, and there's a possibility of importing one screen. I don't know how I did it. I just did it just a minute before. But basically, what I did was someone else created a list of stocks that are considered uh, 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 blue chip, you know. And examples or typical examples are IBM, ABB, the ones that you're watching the screen, Bank of America, for example. So what is nice about it is that you can create your own based on your own criteria. You know, if you have an idea of the type of investment that you would like to have, let's say, for example, that you say, I would like to have, a bank, like something in the sector of financials, and that you would like to see, um, I think it is here probably, you know, you want to have some filter related to market cap, for example. You can say, I want to. In this case, I'm just editing this thing, but you can create a screener that says, for him, for example, that you want companies that have a market cap of more than $50 billion, for example, or that have an
What's the market
EPS.
cap, Hugo?
The market cap is basically the amount that is available in the market for the equity of the company. In other words, is, let's say they have, each of the stock is $1, and there are 100 stocks. The market cap will be $100, but this based on the real value of the stock in the market. That's basically what this concept stands for.
Mhm.
So there's a lot of, in this case, for example, we're taking a look at this screen, which is Blue Chip Finder, and it has the next filters. It says these are companies that are more than $50,000 million, right? That this is $50 billion, that are indexed the Nasdaq and NYSE and NICE, New York Stock Exchange exchanges, that have average EPS, which is earnings per share, that have, I don't know, this is probably more than 2% created. I mean, like growing the average EPS, that have also dividends in the last 5, 3, 1 year. So with those concepts that you can have, you can say whatever concept you want to have for looking for your investments. You go here and they basically create a screener for you, and I really like that, and I found it really interesting because it's a way to, you know to to look for investments for you based on your criteria and what you exactly need from any investment. Okay, so this is what I wanted to share. We were discussing in all truth that this is, um, I mean, I have been involved with investing in these things for many years, and for me, this is really nice. Um, it's like a clear uh, setup, but I am aware that this is not the same for everyone. It can be a little bit clunky. It can be, there's a lot of information in a little screen, so probably we need to have some previous education or some being a little bit more accustomed to this before going there. But I found it really interesting to. I mean, this answers our first question: is, I mean, there are 5,000 stocks out there. How can I pick the ones that are right for me? So I really recommend this idea of going and taking a look at this without buying anything before I'm sure.
Keep your picks for the end. We put picks at the end, so I know what your pick's gonna be.
Okay. I'm not sure. I mean, I'm not sure, Ethan. I don't want to put all my,
I don't know. You've been going on about this app for a long time, man. I know you love it. So I mean,
I mean, I find it useful. There must be, and you know why, Ethan? Because I remember that I used to work for this tech giant, financial company.
Bloomberg.
Yeah, Bloomberg, and this was 10 years ago. So I remember that the screener of Bloomberg was one super killer app. I mean, like it really, people really love that from Bloomberg because it is a lot of the work that you as an analyst, a stock analyst, a stock trader has to, you have. So, but it was not available for everyone. That was complicated. Today, I think that there are more things like this. And what our initial inspiration for this podcast was, like taking a look at where is AI, where is AI in finance, how AI can really help us. And I think that this is a super interesting use case for AI. There's a lot of information, so this technology go there, take all the information and bring and get it back to you in a way that is understandable for you. So that's basically why I really like this.
Cool. So, since we're just checking on time here,
Yeah.
we have two more items that we wanted to cover on today's episode. One is kind of getting a first understanding of what you need to do and understand, like the basics before you start getting into investing. And then we're gonna start doing this kind of. We haven't really fully decided the exact forum for this, but we want to do something like like seeing how AI would invest in the stock market. And so, we're not going to invest real money. Obviously, we're gonna use
Paper
like,
money.
right, paper money. Like, I want to use Investopedia, and Ugo wants to use Stock Rover. So we might actually do a bake off and see who does better, maybe, or maybe we might do, who knows. But we started last episode. We started with Investopedia and ChatGPT. So at the very least, that'll be my side. If you
No,
feel
no, no,
like
of course.
that's
No,
cool, we
no,
can,
we need those. And I was taking a look at other alternatives. For example, I have Thinkorswim of Ameritrade,
right?
uh, which is
Well, that's
really
real
nice.
money. I get that they have paper money, but
No,
that's
no, no,
real.
no. Yeah, that has both. And I will keep the paper money for these experiments. Don't
Yeah.
worry.
I personally use Fidelity for my real investing.
Yeah. Okay.
I
Perfect.
like their
So
platform.
basically, we
Okay,
have.
so let's do it. So we've got ChatGPT, our best friend here, and we're gonna start asking ChatGPT questions about investing. So let's see, and we might have to have a couple of dialogue questions and back and forth with ChatGPT, but you know what? And let's use the fancy model of GPT-4. So, hi, I am. Um, I have never invested in the stock market before. I want to start investing. I do not have a lot of money. Maybe like, let's say average person maybe could have like $10,000. So let's say I've got $10,000 to start investing with. Or actually, no, we're gonna do 100 because that's what we got from Estopedia. That's right. So like
I
100.
also
Let's
have 100 here for in Thinkorswim. I also have 100. I
Yeah.
think.
Okay. Cool. So maybe like $100,000 US. But I really don't know anything about the stock market. What would you suggest that I do as my immediate next step? Let's see what ChatGPT says. Hi, it's great that you're interested in investing in the stock market. Before diving in, blah, blah, blah. Right. It's important to do some research and consider your goals and risk tolerance, which we covered
Yeah.
in the beginning. So that's good to see that that's what it's recommending. And then, chat, because I'm going to read it out loud just because we have this is mostly a podcast, so people are listening. So, number one, educate yourself. Start by learning the basics of the stock market, investment strategies, and terminology. books, all sorts. It gives you different kind of places that, which is great. You got to set your goals. So, we talked about goal setting. Ugo, your goal is, to putting your kids through college. Mine is to retire and put my kids through college. And I'm sure you also want to retire. And then, assess your risk tolerance. We talked about that as well. You got to understand, what's your time horizon? How long do you have? And, in general, even, I said before, if you're in your 20s, 30s, and you have plenty of time, could be that you're just an individual that if you see a dip in the market, that even if you have 30 years, that's still going to put pressure on you. And
Of
why?
course.
So maybe even if you do have a long term, you don't like you're risk averse. Maybe open a brokerage account. So you gotta be able to. You can't just go to by yourself and decide to trade on the stock market. Unless maybe you live in New York City and you get a special license to get. No, everybody today uses the internet and uses platforms. Like I said, I use Fidelity, use Thinkorswim. There's also like ChatGPT is saying. There's also, in addition to that, there's E-Trade. I know that's popular. So is Charles Schwab and Vanguard. There's Merrill Lynch. There's lots of them. Then ChatGPT says to create a diversified portfolio. Stay disciplined and monitor your investments, and then consider seeking professional advice. So I feel like this was kind of very boilerplate, high level, not very tactical.
Yeah,
So
I agree.
let's ask ChatGPT. Okay, that's interesting. Can you give me something more tactical that I can do right now? Let's see what it says. It's thinking. Sure, here's a more tactical approach. Choose a brokerage. Okay, so for this purpose, let's say we chose Investopedia and Thinkorswim.
Yeah.
Fund your account. Okay, we already got that funded. Although if you're doing this for real, then you would choose the real stuff. But yeah, so we're seeding it with $100,000. Then begin with low cost index funds or ETFs. Huh. Interesting. So this is great because it's teaching the lesson that I had to learn the hard way from the beginning here. So I may as well kind of briefly touch on what ETFs are.
Believe me that life is a better professor than ChatGPT, man.
What?
You really learn your lesson from life instead of
Yeah.
ChatGPT. That's it.
Yeah, but I mean, I would much rather have not had to learn it that way because that was a very expensive way to learn it.
Yeah.
But yeah, so an ETF is, gosh, maybe you remember the acronym. I can't remember right now, but it's a combination of funds. Generally speaking, they're either industry targeted, sector targeted. Sometimes you can even get like eco-friendly targeted. There's all sorts of different kinds of ETFs. There's ETFs that are based on the S&P 500 index. So like the S&P is an index that of the 500 top companies, I think by market cap or something, that are in the stock market, and those are considered good. A lot of people, most hedge funds and investment firms, look at the S&P 500 as kind of the benchmark to beat, basically. And if I recall correctly, I believe the average S&P, for the past 100 years or something, has been like around 7% return, I think, averaged, I believe, annually, maybe. But so either way, so start with ETFs. I think that's a fantastic idea. Set up automatic contributions. So that's something that I do too. So every month we have a draft go out of our bank account into our investment account. Monitor your investments, because if you don't pay attention and you don't know that Russia got banned, you're gonna lose your stocks from $11 to $1. So make sure you monitor your investments and continue learning. So okay, so I think we kind of touched some of the real basics, but how do I know if a stock is worth investing in?
And I have a different question as well that I would
Okay,
like you to look for.
yeah,
It's about more specific ratios or indicators that I should look for in an investment, right?
right. That's where I was starting to go with this question.
Yes, that's great. I mean, like, and actually, I have a prompt that I think can be good. Let's see what you have over there. Let's.
So
Is that
yeah,
saying revenue growth? Great.
Yeah.
Profitability, strong
So
balance.
just for our listeners, because you're reading it, because you're seeing it, but just for
Yeah,
our
go ahead.
listeners in the podcast, ChatGPT has given a couple. So number one, it says qualitative analysis. Understand the company's business model. So let's take, I don't know, for example, Starbucks. So Starbucks, what's Starbucks' business model? Starbucks sells coffee. That's their business model, basically. I mean, it's more than that, but we're being simple and quick here. What is the industry they're in? So Starbucks, they're in the restaurant business, I would say. What's the target market? Target market would be probably people that like coffee that have a couple extra bucks to spend because it's not for penny pinchers. And competitive landscape. There's a lot of coffee makers out there. So what's the competitive advantage of that company? That's something you got to really think about when you go to it. Like, for example, if I'm thinking about Microsoft, which is in my head just because of all the AI and all other stuff, their business model is like they have too many business models. It's you gotta get sometimes when companies get too big and they have multiple business models because they have multiple companies within a single company. Um, and so, like, Microsoft would be in the tech sector, target market, and competitive landscape. All that stuff would be important to factor. Then ChatGPT says financial analysis, and this I think is extremely important as well, because and this is something that, like, this is really I think where most of the time would be spent is just pouring through financial documents and analyzing the EBITDA and analyzing the earning per share, or all the things that it's saying in the next bullet, actually, the price to sales, price to earnings, price to book, all those things that there's a lot to cover. Maybe we can do, future episodes on specific things, but we're just trying to be brief and concise here. So, you want to understand, what's their revenue growth strategy? How are they growing? What is their growth? Are they profitable? Are they making money? Are their costs low and their margins high? Do they have a strong balance sheet? Do they have cash flow? Um, so and then ChatGPT gave a couple more. I'll just be brief here. Future growth prospects, technical analysis. It says, I don't know why it says optional. That's weird. And then risk assessment. So things we've already talked about. So you said you had a question. Well, what do you want to ask ChatGPT?
I just wanted to. I mean, I think that this is a great answer, and probably I don't need to ask the question, but yeah, I have a question more to make this more specific.
Okay.
Let's say we want to analyze the price to earnings, the price to sales, or the growth. But the my question is, what is a good objective? I mean, what is a number, a good number objective for each, for at least one of those indicators? Let's see. For example, I like the earnings per share, like the
Well, we
growth
can
in it.
get it to give us for all of them. Why not? It's an AI.
Yeah, ask him.
So, let's say we
He
want to
will have.
analyze. Sorry.
Yeah, maybe they. I mean, ChatGPT will have an answer for that for sure.
So we're asking ChatGPT. Let's say we want to analyze the price to earnings and price to sales. What is a good objective / number for each indicator? And it says it's difficult to give a specific quote unquote good numbers for price to earnings and price to sales, as what's considered reasonable or attractive can vary depending on the industry. That's very true. Like, for example, in tech, the evaluations are wildly different than, say, in, I don't know, the corn market, right?
Yeah.
Or the chicken market. Just thinking of a specific Billions episode right now.
Yeah. I see. I see. Okay. That's interesting.
Yeah. So okay. So after it's the disclaimers. It says, okay, compare to industry peers. So let's keep going with Starbucks. So you want to compare it to I'm blanking on coffee names in the U.S. But let's say McDonald's, Burger King, any place you can get coffee, right? Let's compare it to that. Although it's not really the same because, like I said, Starbucks is more of a premium.
It's a different industry, probably. Yeah.
So yeah, but if it were Microsoft, you compare it to Google, you compare it to, to Apple or other companies like that. So compare it to industry peers. Okay, so and see what's normal for that industry. Then it says number 2, compare to historical averages. So you look at, what did it used to be and what is it now? And you can do that also for other companies, because maybe companies are there's something weird's going on today in the market. So you might want to look at companies also when you're looking at industry, to get an idea. Look at the industry history too. Number 3, compare to earnings growth. Number 4, analyze price to sales ratio in context. A lower price to sales ratio might be attractive to value investors, but it's essential to consider other factors like profit margin and growth prospects. So, Ugo, what is a value investor?
What is a value investor? I had a value investor here asking me something. My kid. I'm sorry about it. So, what is a value investor? You said that's a
Yeah.
question. Great question. I was taking a look at a book that a friend here in Colombia gave me from this Peruvian guy. The name of the book is like, "Where are you?" And where are you investing your money? Something like that. And he described very well what is value investing. And the description, I think, is the best description I can give you is that value investors are those that are really focusing in create in understanding the value, the real value of a company. I mean, like, there are many ways in which financial guys and financial experts can uh, decide and can say what is the worth or the value of a company. It is not that easy as multiplying the stock. I mean, it's not the market cap. It is more than that. And it's basically considering what will happen with the company in the future, under different scenarios. So value investing is basically being able to evaluate a company, a stock price, and uh, buy the stocks that are undervalued by the market, because one of the key aspects of this theory is that sometimes the market is a little bit I don't remember the word, but it is not. It responds with emotions. It's like an aggregation of many emotions, and sometimes for reasons that are not associated with the own stock, the proper stock. There are some stocks that are suffer for conditions of the market, and that situation makes that the value, the stock price of the stock, it's down below the value. So people like Warren Buffett, for example, are known for doing that, analyzing many companies. And once they have a clear idea or a clear theory of what will be the value in the future of this company, and they compare that value to the current value in the market and they find a gap, they buy these companies. And the other thing is that they tend to buy these companies forever. Right? They are not thinking
Long
in
term.
selling the stock. Yeah, they're not thinking selling the stock tomorrow. They're thinking keeping the stock for years, actually for forever, actually, in some of the cases. So that's value investing. I think, I mean, it is a little bit opposite to another discipline where there's also a lot of money, which is more like day trading, something like that.
Hmm.
That's basically this idea of buying stock in order to sell it in a really short term, even in the same day, and get the benefits out of the stock quick. Those are basically different approaches, right? Of course, when you see that Warren Buffett is the exponent of the first idea, you tend to think that it can be really really good.
Well,
For,
I mean, Warren Buffett, anyone that's anybody in the investment community would know that Warren Buffett is traditionally a oh my gosh, Benjamin God, help me out, Ugo. Benjamin what's his name? Graham. There we go. Benjamin Graham, I think, right?
yeah,
Yeah, Graham.
yeah. See,
Yeah,
yes, 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 yes.
the yeah, so that's really value investing, and that's Warren Buffett style of, invest, ride it out for the long term, get dividends, and be good like that. So we're coming up on time here. We're getting close to the hour mark. So let's do our investing with ChatGPT. So I got Investopedia up right here, our simulator. So oh man.
And I have Stock Rover.
One at a time, people, please.
Yeah,
We can
yeah,
do
yeah.
this after, okay? So let's see. What do we want to invest? What I think I want to do with Investopedia, since you're going to do Stock Rover, I guess, or
Yes,
Thinkorswim.
go ahead. Go ahead,
So
go ahead.
I want to see, what do we want to invest in? Okay, so let's see. So here we got our screener. Like, you had your screener there. This is the screener for Investopedia. So what do we want? So obviously we want it on the US exchange, current day trading. We want no submarket. Whoopsies. Sector. Yeah. So let's say since I'm a tech guy, so let's say anything in the technology space. So I can. Oh, that's nice. Okay, so electric technology, health technology, and technology services. So that's the sectors I want to look at. I don't really care right now about the index. Industry doesn't really matter as long as it's tech, I guess. Country, that I do care about because I only want to invest for this purpose in the United States. Um, and then market cap less than it's between 50 million and 2 trillion. Yeah, okay, that's fine. But actually, maybe I want to try to find something that's good for, like, something untapped. Because maybe I want to, I'm not looking for blue chip right now in the 2 trillion mark. So maybe we say, this is weird. So this looks like, okay, interesting. I don't know why it just kicked me out, but okay.
Okay, that's a point for Stock Rover.
Yeah, okay. Point for Stock Rover. 1 point for Stock Rover there. Fine. Let's just do this again then. Tech. That was weird. I don't know. Yeah, I might, if that keeps happening, I might get a little frustrated. But okay, United States again. I won't touch market cap. It clearly doesn't like that. And then let's see what else. Free cash flow. Well, let's see what this returns. Okay. How do I hit search? Where's the search button? I guess it just automatically does it. Okay, and let's sort it on volume because I want to make sure that it's liquid. Because that's another thing, is you don't want to necessarily buy a stock that you can't get out of. Although usually that's not a problem, but I have in the past occasionally run into it. Let me also set a filter for the price per share, because I don't know if we talked about this last time, but there's something interesting that needs to be understood when you're trading. That and there are platforms like Robinhood and others that don't charge anything, but at least back in the day, I remember having to pay $7.99 per trade commission. So you want to be able to purchase. Yeah, you want to be able to purchase large amounts of shares to be able to offset that cost. So I want to look for stocks that its price is not that high. So I want it below, let's say, $10. So it's got to be below $10. So, and let's see, what is Zella? This seems to be interesting. Oh, whoa, 354%. Strong buy. What is open PTPI chart? Okay, let's see what this is. Whoa, look at that spike, man. It went from $1.
What is that?
In like a day, 1 day. What happened here?
Oh, you over there.
So what is this company? Let's see. Petros Pharmaceuticals Incorporated engages in men's health therapeutics. It is involved in sales, marketing, regulatory, medical affairs, finance, blah, 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 blah. It operates through prescription medications, medical device supplements. Okay, but why did it jump? Holy moly. Let's Google it. Maybe there's something in the news. Yeah, there. So let's check. Is there Seeking Alpha? I use Seeking Alpha a lot. So it said that a press release about purported acquisition of the company is fraudulent and not issued by the company. Petro shares gained 34% following a trade halt earlier after skyrocketing. Wow, they actually halted trading on it. Wow, that's incredible. Okay, so let's see. Let's ask ChatGPT if it's a good investment. Okay, I want to invest in a specific company. Can you help determine if it is a solid investment? And I'd be happy to help you analyze a specific company, but please keep in mind that AI okay, it's giving its disclaimers. So let's see, how old is this? Well, because I wonder if ChatGPT has knowledge of it. Let's see, where is the all-time range? Let's see. Founded in May 2020. Okay, so it should know of it. It should be at least aware of it. So,
and it is not, I mean, it's not expensive. It's $4,
well, I
$5.
mean, it's relative. Right now, it's $4.50, but I mean, it's insanely high right now.
I mean, let's see what the story of the company. Yeah.
So, okay, so I don't really care what it says as long as it has a context that I want to invest. So, okay, here is a company that I am thinking of investing in. Petros Pharmaceuticals Incorporated, and it knows its ticker. That's good. And it's telling us, a brief description about what it is that we just read. And let's get some metrics for ChatGPT so it can evaluate, because obviously it doesn't have access to this yet until ChatGPT plugins are available, at least. So where are the technical details? Go away. This thing's annoying. Well, fundamental data, market cap. You know what? Why don't I just try feeding like this? I wonder if I could do this to the AI. Because, we're using AI, so let's see how far we can push it, right? I'm just going to copy all of this. Okay, here are some of the technical details of the stock. What do you think? Please be brief and concise, because your answers have been super verbose so far. Based on the information, here's a brief and concise analysis. Holy moly! I just pasted it all and it just knows. Look at that. This is what the podcast is all about, Hugo. Using AI to invest. So it says, based on the provided information, valuation with a price to sales ratio of 0.3 and a price to book ratio of 0.1, the stock appears undervalued compared to the industry standards. However, the lack of price to earnings ratio suggests the company is not profitable yet. Balance sheet. The company has a solid current ratio and quick ratio, which indicates it has adequate liquidity to cover short-term obligations. The debt to equity ratio is relatively low, suggesting manageable debt levels. So far, it's sounding pretty good. Operating metrics, negative return on assets, return on equity, and return on investment capital indicate the company is not generating positive returns. That's not good. Margins, the company has negative net gross operating and pre-tax margins, implying it's not currently profitable. Yeah, we know that. You said that already. Income statement, the company has a negative net income and negative EBITDA, which indicates it is not profitable at the moment. I mean, how many times do you need to say it's not profitable? I guess it's showing the point that there's a lot of things to consider that you can tell. Like, one indicator is not enough to say it's not profitable, right? You have to have the complete picture to see what's going on.
But the answer is great, man. I mean, it's really useful. I mean,
absolutely. Yeah.
Just gave you a complete analysis with the information you provided, right?
I just copy pasted whatever I had on that page. I didn't even format it. So
This is
dividends, the
definitely
company doesn't pay dividends, and price history, a high 1-year beta 2.4 indicates that the stock is more volatile compared to overall market, higher level of risk. Given negative profitability and operating metrics, along with the company's current unprofitability, it may not be ideal investment for conservative or risk-averse investors. So you might not want to invest. However, if you believe in the company's long-term potential and product pipeline, you may consider this stock as a speculative investment, accepting the associated risks. As always, it's essential to conduct blah, blah, blah. Okay. So basically, it's saying this is a very risky but possibly rewarding thing. So, but what I want to do now, just to be absolutely clear, is I'm going to give it the article from July. Oh, wait, this is from 2022. No wonder that's not accurate. Here, this one is from April 14th. Okay. So let's see if we can do this again. I'm going to copy paste this article and see if it changes its mind. Okay, awesome. Thank you. Here is an article that I found on the internet because I saw it grew by over 250% in one day or something crazy like that. Given this article, given the, I didn't spell it right, given this article, and given the fact that my risk tolerance is super high, would you still recommend going ahead with investing in it? Based on the article and your high risk tolerance, investing in this stock might be a speculative play that you could consider, but with caution. The stock has experienced a significant increase in pre-market trading and has a relatively low short-term technical score, which could indicate increased volatility and risk. However, it's crucial to remember that short-term price movements are often driven blah, blah, blah. Okay, before making any decision to blah, blah, blah. Okay, so it's kind of trying not to give really an answer because whatever.
And
But
then it's more at the end as well. It's more like a disclaimer answer, not like. But I mean, but
yeah.
it basically said yes. I mean, if you're considering this would be a speculative investment, go ahead. That's it.
Yeah.
No.
Although I think Investopedia is kind of a little
So
unstable.
so we can go. I mean, yours basically that can be a move. It will be interesting to consider that move. And in the meantime, I would like to show you what I did as well. Okay.
Well, okay, I'm gonna go ahead and invest in this.
You will do it? You will do it?
I
mean,
will, but first I'm gonna say I have hang on, give me one more minute and then I'll let you.
Yes, go ahead.
I got one more thing to do, and I just want to tell it because I need to know how I want to be able to diversify my portfolio, right? So I want to know how much
resources.
Right. I wanted to know how much money I have, and I wanted to know how much I should invest. So I have that, and I've got that is Microsoft shares, and I've got a cash of and buying power of that, and I have, given the numbers above, how many shares at what was the price per share?
452.
4.59.
459.
How many shares at $4.59 would you suggest I purchase? Oh, come on, dude. It's saying, for our listeners, it's saying, as an AI language model, I am not a financial advisor and cannot provide specific investment, blah, 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 blah. So, and it's, again, giving me, fine. Okay. Okay, but let's say this was paper money and you had to answer. What would your answer be? Although it is giving me something. So once you decide on the percentage of your portfolio, actually, this is interesting. Hang on. Once you've decided on the percentage of your portfolio to allocate, use the following formula to calculate the number of shares to purchase. Number of shares equals your investment amount divided by share price. For example, if you decide to invest $4,998.67, I don't know how it got that.
No,
What?
that I mean that's it. I mean, it is not giving you a great answer there as well. It's like it's saying basically that you need to divide
Yeah.
the available money for, I mean, it's not.
Oh, okay. So if I tell it, that, oh, okay, this is a way around it. Nice. If we're treating this as a hypothetical scenario with paper money and considering your high risk tolerance, I'll provide an example of how you
Ah,
might.
okay. Now he's not providing a financial advice. Yeah, that's
Right.
great.
So let's assume you decide to allocate 10% of your total account. Okay, so it's saying I should invest. I guess it's saying 10%. All right. So that means
Good.
2,178. I'll just round it out to 2,000. So I'm going to go ahead and purchase 2,000 shares of it on Investopedia and trade. And what was it again? PTPI. PTPI. Honestly, I would probably, in real life, I might think heavily about shorting this stock, to be honest, because there's no way it's going to be, unless it's some amazing thing, it's got to go down. But let's see. So 2,000 shares, preview order. That's $10,000. Submit. And boom, market is closed and open 11 hours.
Okay.
And then I will have it. All right. So that was ChatGPT investing. Let's check on Stock Rover.
Okay. So what I did with Stock Rover is basically I want to study this a little bit more, but I found that there's a lot of of potential criteria that you can add to select investment. So I just wanted to use the next criteria. First thing I wanted to add, I wanted shares that will have a 5-year EPS. EPS is earning per share growth. Yeah, estimate
So that
between
means it
20
has
and
to have
30%.
grown every year over 5 years, its earnings per share.
Yeah, but this is for the next 5 years. So this is fundamental in
Oh,
the idea.
projection.
Yes, this is
Got
what
it.
I found here. Okay, I honestly okay, like there's a, like, I don't know if they're asking also to ChatGPT, but there's like an estimation that there are stocks that will be growing their EPS year over year more than 20, between 20 and 30%. Let's say I can say, instead of saying between 30 and 30%, I just can say more than 20%. Okay, and it will, of
Mhm.
course, the number will be higher. Then I want also stocks in the technology market that had an IPO date between to 2021 and today.
That is a good idea. That is smart. I like that. That's a good
I
idea.
like that because those are new companies that are
Yeah,
just,
yeah, no, absolutely. Yeah, I love that. That's a great idea.
in technology. And the other thing is that are positive in, or this is what I wanted. I would like to confirm this because the average net profit over the last 10 years in $1 million, I put it in more than $1 million. I mean, like, these are profitable companies. Okay.
Yep.
Yeah, perfect. So I put these 4 criteria. I could use more criteria like this. And then I found this list of companies that you're seeing here. Do you see?
Yep, I do. Yeah.
Okay. So we have IBM, interesting. Celebrity, the local DV. And I am really, I knew this company. If I'm not wrong, this is an Uruguayan company that had an IPO recently in New York. So I'm really interested to go over here. So I wanted to ask you, I mean, can you ask ChatGPT,
Yeah,
please,
sure.
what ChatGPT thinks about D local, DLO? I don't know
Yeah.
if you need. I provide some more
You tell me. This is your site. So tell me what
yeah,
you
no,
want.
I mean, I like that stock. I would say it would be interesting to find to put some money over there as well. I mean, considering those four criteria, I think that this require more study, of course. And this is not, again, this is not a financial advice. We're trying to get what AI provides us in terms of investments, or I mean, in investment strategy. So DLO is the symbol for the local. DLO.
But hang on, is it before 2021 founded? Because remember, right now ChatGPT is limited to that data, so it may not have knowledge of it. But so you'd have to give me
Yeah,
more
yeah. This is
actual data.
founded before. Yeah, this is founded before 2021, but it
Okay,
was published in the US from 2021. I don't know. I think that it was like probably in 2022 or something like that. Public in the
okay.
US
Well, what's
or
the name
not.
of the company?
The LO is the symbol, and the company is called The
Yellow.
Local. DLO, yeah.
Let's see if it knows. DLO. Yep, it does. The Local Limited is a global payment processing platform that
Yeah.
specializes in emerging markets. The company enables merchants to accept payments and make payouts in local currencies across a variety of payment methods. Okay, so it's like a PayPal kind of thing. Given that my knowledge is limited, number one, business model is research DLOs. Okay, it's telling us what to do. So basically, if you want a good answer like I got before, we need to feed it the data. So actually, I can just find that. So let's go DLO, stock financial data. Let's see where we can get that from.
Where are you looking for?
Yeah.
The
Oh, this is actually an Israeli company. Interesting. Okay. Um. So I'm on Yahoo Finance real quick, just grabbing some data. Yeah, I'm just gonna let's see if it'll take this table from it. So here is some financial data. What is your thought on investing? Remember, this is paper money, so don't worry about
don't
disclaimer.
panic.
What?
Don't panic. ChatGPT, the word.
Based on the financial data provided, DLO has been showing strong revenue growth in recent years. Their total revenue increased from 55,000 in 2019 to 418,000. Wow, in 2022. The company's gross profit has also shown a consistent increase over the same period. DLO's operating income and net income have grown considerably in recent years as well. However, it's important to note that investing in individual stocks, blah, 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 okay, that's a disclaimer. If you were to hypothetically invest in DLO, you should consider allocating a percentage of your portfolio to this stock based on your risk tolerance investment goals. Okay. I am risk averse, and have 100K paper money. How much would you recommend I purchase at 13.91 a share? At 13.91 per share. As a risk averse investor, it's important to build okay, yeah, come on, just get to the numbers already, man. One thing about GPT-4, which I don't fully understand why, is it's so much slower than 3.5 for some reason.
Yeah, it is. Hmm.
Yeah, I mean, 3.5 would have been already done way long ago. But okay, so it's saying to invest 359.4 shares, so $5,000. So that's
Let's
ChatGPT's
do it.
recommendation based on that.
Okay, so I will do it in
Why
my
don't you
paper.
round up to 400?
How many stocks are there then?
ChatGPT said 359.4, so I'd say round up to 400. It's paper money, right?
Yeah, it is. I have a limit order at 1410. That's the market price that I
Okay,
see
sure,
here.
yeah, whatever.
Should I go?
That's better actually, because yeah, it's a 1410. No, it's 1391. But how can we have 1410? I mean,
1410 is the
is it
price that
after?
I have to like. That's the price that I'm seeing in my screen, in my paper
I
money screen.
wonder. Yeah, let me see. Maybe it's the after hours that took it up or
Yeah,
something.
or, I mean the price can be
Oh,
different. That's the reference they have, maybe
it,
based on the trading on Friday. So I will spend $5,600, something like that. Okay,
okay. Yeah, cool.
let's get
And
it.
then in next week's episode, we'll see.
Please,
We'll
paper
see how
money.
our,
Will
how our sorry.
please give me 1 second. I
I'm
will make
sorry,
sure
Hugo,
this
I'm
is paper
sorry.
money. This is paper money. I'm not doing anything wrong here. Yeah, it is. Go ahead. I just buy it. I just bought it. Okay. Let's take a look
Uh,
of what happened with this next week, man.
yeah. So I was
Really
gonna say next week we'll compare our portfolios and see how we're doing. This is gonna be fun. Are we? Should we
yes.
make a gentleman's bet on who outperforms who?
Oh, let's see. Now, after next week, we can start doing those hands. But
Oh, you
let's
want to
see.
hedge your bets? I see. Okay.
Yeah, yeah, yeah. But it was interesting. The good thing is that we can work. I mean, honestly, the answers that were received from ChatGPT were great. I mean, it was really interesting to see how it can absolutely go and get all the financial analysis, as it would be like a financial team in a bank or in a broker, right? Like that's the kind of thing that is super. I mean,
And dude, all I
incredible.
did was copy paste from a
Yes, man.
website. Like I didn't format, I didn't do an API call. Literally copy pasted the text and pasted it into ChatGPT and it just figured it out because it's AI.
Okay, then I think that this has been nice. Great. I think that is now 1 hour and 20 minutes. I think we can
Yeah,
call
this
it.
has been a long episode. So if you're still
But
listening, then I guess you're a diehard fan. So thanks for listening. And
yes.
before we go, I want to remind everybody if you haven't, please make sure to subscribe if you're watching on YouTube or on Twitch, or if you're listening it on Apple Podcasts or Spotify. That's where we're at. Please, subscribe to us. You can like it because it helps us get out to more people. And remember, our goal here is to help educate people, get people investing and being more knowledgeable financially when it comes to finance and AI. And also, if you found this interesting, please share with your friends if they need to learn something. And finally, we'll get to picks, and then we'll end for today. So my pick is going to be I don't remember what last time it was, so it might be a double, but I'm going to go with, since we were talking about value investing, the Intelligent Investor book. I believe that's what it's called, right? I don't know why my brain's foggy right now. The Intelligent Investor. Yeah, the Intelligent Investor.
Nice. The
So
intelligent.
that's a probably like, it's like most people consider it, or used to consider at least, as the Bible when it comes to investments.
And mine is one that is in Spanish. I'm not sure if it is in English. I'll mention it
That's okay.
anyway. The name is Where Do You Invest Your Money? Something like that. From Vargas Llosa, a Peruvian guy. I'm looking for the book here, but it's really interesting because it is basically written for anyone who is thinking in the future but doesn't have a lot of experience investing. The kind of person that we want to address as well. So it is interesting because it shows you the basics of the fundamentals, the fundamental investment, and it is highly recommended as well. And billions. I imagine Ethan is really happy with billions at the moment,
I
which is
love Billions, man. I told you I was binge watching, rewatching it. I'm up to, like, while I'm doing other stuff in the background. So I'm up to like season 4, middle of season 4, basically like where Chuck has become the Chuck Rhodes becomes the United States, not the United States, sorry, the U.S. attorney for the Attorney General for the state of New York. So it's starting to get interesting where he becomes friends with Axe and they're both plotting together. I love that show, man. It's one of my favorites.
yes. The name of the book in Spanish is ¿Y tú dónde pones tu dinero? From Álvaro Vargas Llosa. And you, where are you putting your money? That's my thing. Okay, friend. See you next episode. We are Hugo Carmona and Ethan Pressberg, and this is AI for investing and being better financially savvy.
That's right.
Goodbye.
Thank you. Bye bye.